G'day everyone, welcome back to Pete's Investing. Today is April 19, 2023. This is a US crude oil price update. On the daily, we're still in a pretty strong decline on the CCI 1500 with a moving average 400. Whereas on the 4 hour and the hourly, it's broken up through the moving average and in more bullish momentum. However, just be mindful of this resistance to be respected, and we'll talk about that as we go through each chart. On the daily, first off, I've got this resistance at 83.40 and a support at 64.36. I've also drawn this descending diagonal line going through those bottoms and through those ranges. But just be mindful, the CCI 1500 is still in a pretty strong decline. It's slowly approaching to break above it, but at the moment it's still pretty low. First, we need to first see it break above the resistance to have more positive outlook on it. On the 4 hour chart, which is our key chart on the crude oil price and momentum, again, it's broken up on the CCI above its moving average, which is a bullish sign, and that would have been a nice area potentially to go long. But again, you would have been trading against a trend. Now, I've got a couple of ranges here. Let me first talk about this first little range between that low between the support at 64.36 to the resistance at 83.40. Now you can see there it's still hovering around the 23% retracement. It hasn't broken to the downside, so that's a positive move in terms of bullishness. So we need to see it break higher on the resistance, as we said. And longer term, going back a bit, between that high and that low, the key thing to note is you see there near the resistance at 61% level of the retracement of that area. That 61% level is key, because if it breaks much higher than that, then it's going to be a trend reversal, and that's where we will see the daily chart potentially break more to the upside. At the moment, it's still being stubbornly resistant around this area, and sort of hovering around a 61% level. So if it breaks to the downside, that's just simply going to be a retracement to the 61 and further retrace to the down. So what we're really looking for is a break above 61, retracement, and especially breaks above that resistance area. The hourly chart, not much really more to add to that. It's just pretty much the same as what I just mentioned. So again, that's sort of threatening to break to the downside of the CCI on the moving average. And if it does that in the coming hours, then we're going to see that turn red and turn to the downside as well. So to understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and like us on Patreon. Thanks for watching, and see you in a future video.